Deepak Shenoy also joins us on the show. Deepak, hi, good to be speaking with you. I wanted to begin by discussing Britannia with you. The commentary on the con call was quite strong, even though the numbers didn't look so impressive at the first look. How much credence will you give to the commentary wherein the management is expecting double-digit volume growth? They are expecting to increase their market share as well as the volume share?
Hi, I don't track Britannia, so I haven't seen the results this time.
No worries. What we will do, Deepak, is perhaps play the bite of the management itself, because they are talking about how perhaps post-election they'll see a double-digit volume growth. They're expecting the FY25 revenue growth to be much stronger than FY24. Let's quickly listen into that soundbite, and then, of course, we can discuss a whole host of other stocks that you do track.
Closely monitoring the commodity situation and assessing what are the actions that we need to take as we go forward. We remain vigilant on the competitive pricing front, and our strategy will be to remain focused on driving market share while sustaining profits. Frankly, we are going to drive top line hard this year. It's tough. The year, how the last year ended will sort of, continue for a few months. But we are hoping that as the monsoons start to come and, the election results come, etc., things will look much better. So we are going to make it, a mission to make sure that we get the top line to grow much faster. I think the volume growths this year, we expect them to be quite solid. Obviously, barring the entry into the year, which is pretty similar to the year that's gone by, and post-election, post-monsoon, I would think that post-election, post-monsoon, we would be aiming towards a double-digit volume growth for sure.
Okay, that's the commentary coming in from Britannia. And it's interesting the kind of trend that you've seen from the entire FMCG pack. Be it Dabur, be it Britannia, and we're yet to hear from Marico when they declare their numbers shortly. But Deepak, just wanted to understand, what do you attribute this kind of volatility in the markets of late to? Is it just nervousness and lightening positions ahead of the elections?
Aisha, I think elections plays a part, but there's also a role being played by global dynamics. For a long time, we've not seen too much of the, global event changes impact us meaningfully. There is a war in the Middle East. There's the war continuing to happen in Ukraine, and those, while we have, I think, kind of been lulled into a sense of that this is not major. Any of these things could change at any time. There's elections that's underway in India. There is elections coming in the US. There are talks of significant capital gains, regime changes in the West. Not just talks. They've actually proposed them in the Canadian budget today. They've talked about it, about how American capital gains may change next year. So I think there is that uncertainty layer that was not being priced in earlier, and suddenly it's starting to get priced in. The VIX being at 14 or 15 or 16 or whatever, it is actually much lower than it should be. These numbers used to be 28 and 30 and 40, in fact, at times of similar layers of uncertainty. So I would say I don't think we have seen the beginning or the end of volatility. We're just seeing the beginning of it, and we should welcome it. This is how markets are supposed to behave.
Okay, so that's a word coming in. The volatility, perhaps you're not done with it just yet. Perhaps given the uncertainty, India VIX could spike further. Numbers for Marico on the screen, and it does look it's a big jump on a year-on-year basis, but I guess perhaps the street went in with a bit of a lower expectation. Overall, the gross margin, consolidated margin has improved to 19.4% versus 17.5% last year, and the profitability only had a smidge of a recovery versus the year gone by. In fact, actually just 5% on a year-on-year basis. But Deepak, coming back to the big buzzers in the trading session today, the power financiers are coming under pressure on account of those proposed norms from RBI. What do you make of it? How big an overhang could it actually be?
So we own both of them, so PFC and REC, so obviously interested. But one of the things that I've noticed over here is perhaps, they are trading at price to earnings of just about 8 times. They are tremendously profitable. They've grown profits 30 to 32% in the last quarter. This quarter also we expect that a similar layer of profit growth will come in. What happens because of these norms is if you look at something like a PFC, if its standalone book is roughly, I think, 270 or 280,000 crores. If you assume that all of it was project lending only before commencement of operations, that would possibly add, at best 15 to 20,000 crores, even if it was at 4 lakh crores of a book. That would add 15 to 20,000 crores of provisions, which would reduce their net worth from, say, 76,000 crores, which is what it was, to 56. Assuming this is the most pessimistic case because they have projects in various stages of operation, I would still say that is not a big deal because it reduces their capital adequacy ratios from 26 or 27% to 20% at the absolute extreme. 20% is pretty good from a adequacy standpoint. They may have to raise some capital, of course, going forward. But again, given the relatively low price, I don't see that as a problem. So I think fundamentally speaking, this is not a major blow, but it does create uncertainty about the future. These are draft guidelines, so they will eventually come with final guidelines. They will apply from effectively FY27 onwards in full. I don't think at this point this will be a major concern. RBI has a right to be concerned about projects where financing happens specifically from banks, but Power Finance Corporation and REC are probably caught in the crossfire. But banks do tend to under-provision loans given to project finance, given the uncertainty of operations over there. And they do want banks to place a larger amount of provisions just from a prudential basis. Not really because projects are going bad or something like that. I think RBI is right where it is, but I don't think the real impact is going to be, should be PFC or REC. I think it should be some of the consortiums of banks that actually fund them, including the public sector ones. They will get affected more by such project financing norms. But yeah, I mean, PFC and REC have taken it on the chin, and you have to wait to see how they absorb it. I think they've come out with statements saying it's not a major impact, even if it was implemented in full.
So another 5-10% decline, if at all it comes into place for a PFC, REC or an IREDA, would you say add more?
We've actually got it in a portfolio that's trading them on a momentum perspective. So they're largely price-based. So if they were to fall more, they would actually fall out of that price criteria. But I think fundamentally, they might actually look more attractive going forward because they will probably be one of the few people who can finance, do project finance in these areas. Given that their competition is probably going to shy away given the 5% provision, they won't be so badly affected. So I think short-term negative, long-term positive. I don't see this as a major issue.
See it as a major overhang. Hold that thought, Deepak. We also have Ansh joining in to talk to us about the big price volume buzzers at this point of time. Ansh, take it away.
Right, so let's start with the stock of the day, which is Godrej Property. The stock is up over 10% trade today. Also, the stock has surpassed above its key pivot high of around 2,680 rupees with volume of over 5 times its average trading volume of last 5 sessions, touching record high level as well. In addition to that, the stock has also registered biggest single session gain in over 3 months. Apart from this, Alchem Lab will also be in focus as the stock has actually given a breakout from its reverse head and shoulder chart pattern, which was intact for almost 2 months. The volume here is around 2.5% of 2.5 times of 10 session average volume, and it has also surpassed above 50 and 100 DMA today itself. Lastly, ABB India will be in focus as the stock has given a breakout from its horizontal resistance zone with volume of over 2 times its average trading volume of last 10 sessions, touching record high levels. So these are the breakout stocks based on price volume action.
Those are some buzzers in trade. Deepak, want to get you in on Kotak Bank. I mean, as I speak, it's almost scaling up by about almost 5%. Would you believe that worst of the damage post the RBI ban is behind us? I mean, the numbers are looking really strong, although the management is still, a little perturbed about the fact that they will have to do more reputation management than, look after their balance sheet right now post the RBI ban.
To be fair, Asha, I don't think they have a balance sheet problem. Now it's going to be an income problem because a lot of the income that was coming in from some of the online measures, whether it was 811 driving in some of the liabilities, but also a lot of the assets. From an application perspective, the cards also being a relatively small part of their business right now, but they were planning to grow it. So there is an income pressure too. Reputation wise, given that some of the biggies have also gone through this, HDFC Bank did, Bajaj Finance just got out of it. I don't think it's that much of a reputation damage because, yes, there may be some issues, but as long as Kotak is clear about that, they will fix it. And it will take some time, 6 months to a year at least. I would say, you have to kind of wait till that time before they're able to kind of come back and push this meaningfully. Again, not a balance sheet problem here. They have solid balance sheet, solid net worth. So I don't think this is going to be an issue there, but it is going to be an issue for growth for the next 2 quarters for sure. So I think, yeah, well, today's move may have been on the back of what happened in the Jan to March quarter, but obviously the April to June quarter will not be the same because they have the ban in place. Therefore, I would say just be more cautious here. We do own a little bit, but honestly, nothing meaningful. And I think we'll have to wait for some more clarity to emerge going forward as well. I don't think Kotak is a bad bank. I just think it's going through a period of uncertainty. And whether this is the actual bottom or there's more, restructuring kind of news to come in within the bank itself, we'll have to wait and see. But I would say just be cautious and not assume that the worst is behind us here.
Sure. Interesting. Let me just get in some BTST ideas as well before we move forward. Kunal, what's in your list?
So the first one which I would recommend would be NHPC. The stock is one of the few PSU names which is still doing pretty well, trading above 100 plus levels so far. So would suggest a buy with 108 as a target. Stop loss could be kept at 97. And Jyoti CNC is another name on the mid cap end which is looking attractive. The stock has formed a bullish hammer pattern on the daily chart so far. So looks attractive for a target of 880. Stop loss at 770.
Right. Naresh, what's on your BTST list?
That would be a buy on Marico, which has given a short-term swing breakout, stop loss at 524, target price of 540. Second would be a buy on Alchem Labs, revised stop loss at 50 and 20 and a target price of 50 and 80 to 5200.
Okay, let's get in a buzz across dealing rooms as well. And let me take it across to Sharad. He's got Prestige Estates, the stock that he's picking up some chatter on. Sharad?
Stock in focus is Prestige Estate projects, and what we are gathering from the dealers is buying is coming in certain domestic institutional segments, and importantly, it's said that a PMS has also added to their stake. Now, of course, the volumes is up almost 2 times its 20-day average, and over the last 4 sessions, there has been a strong delivery-based buying, with the stock going up almost 14% over the last 4 trading sessions. Apart from this, company recently came out with its numbers, which are very strong, especially the Q4 and the FY24 numbers across most of the operational parameters. And the key triggers ahead for the stock include a strong demand momentum, which is expected to sustain going ahead as per the management commentary. And also they have stated that they will be entering new markets such as the NCR and the Pune region. That is something the street will be watching out for.
Right, okay, that's the buzz on Prestige Estates. But Deepak, before we let you go, anything that you're keeping on your radar, if it were to fall further, you would want to buy?
To be fair, we still have LIC and it's falling, and we are buying more there. I believe longer term, it's still a good play. Even from here, the fourth quarter is likely to be pretty good because they recognize a certain set of revenues only in the fourth quarter related to their participating policies. The 7.5% of profit that they will share with shareholders is taken out entirely in the fourth quarter. So that will be a fairly large chunk to add. There have been a bunch of other, both tax demands and tax refunds that have kind of come in. That is going to play a little bit more in terms of, of course, it affects profit a little bit lesser, but those are parts of it that come in. And then the commentary for the years forward, because a lot of things go off this quarter in terms of being one-timers that was spread across till 2024. Some of them will reduce going forward. So I think profitability increase is likely. I don't expect a big dividend because even now they seem to be building up their capital buffers. But I do expect, fairly large numbers on profitability, probably 45,000 crores for the whole year, most of which will be in the last quarter. So waiting for the results over there. And we still are buying BSE because despite what happened recently in terms of SEBI giving them a notice about paying up for the options volumes on a nominal notional basis rather than on a premium basis. They have increased their rates and perhaps are going to recover any future charges from customers directly, but also that they have enough cash to be able to pay up this without meaningfully impacting their balance sheet. So I would say, bullish on these two. We haven't picked up anything new yet, but times can change anytime. Results are coming in, something interesting, and we will buy, but nothing new so far.
Nothing new so far, but looking at adding positions perhaps on BSE as well as LIC. Thanks, Deepak, for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.